You see, as an educator, I always find out what my student could be missing. You know, each time you see me, they kill the market, and I see my followers too, they are also killing the market. I don't care about showing them new things. They are getting it as far as I'm concerned. But when I see that I'm killing, and the same pair we are trading, they are not seeing it, I'll find out what is the problem. How do we, how do we make it better so that everybody will understand, will catch the scope. Honestly, this chart is not difficult at all. Very simple, but just follow the rules. Okay, I'll show you two things. You will notice that this, if you have this and there is convergence, it becomes valid to buy from here. Is that not correct?
It is.
Correct. So now you also have this. If you like convergency, then here will be your demand. I'm sorry if you are from free group, there are a lot of things you will not understand here. It's not my fault. If you have to understand, you have to go to the theory. I have to go to the theory and I cannot do that. This is a practical session, so just bear with me. All right. So now, if you notice the market, how many times do you see this? You know that this depicts a strong momentum in the market, while this depicts a very slow momentum in the market. And for it to push, you need to take inducement. Is that not correct?
It is.
You will now discover that you do not see this. You do not see this. In many occasions, you will not see it. Am I correct?
Yes, sir.
Is this one now you will be seeing? Okay? So, you have gotten that picture right now. The second picture I want to paint today before I go to the main thing is that this structure you are seeing or getting a valid trade setup means that setup must have had a clear structure created before the session open. And when I say session open now, excuse me, don't even talk of Asia, just say London. That is 8 o'clock, 8 to 9:30 in the morning, and then 1 to 2:30 or 3 p.m. in the afternoon. London, New York overlap, London session. This is what I'm saying. So every setup that is going to be successful must have had a structure that is created in waiting for that session. In waiting for that session. And what that session will only do is to just mitigate. To just what? To just mitigate. As soon as that mitigation happens, you are now looking for your entry. So it is the entry that I want to re-echo for you today. But I cannot go straight to the entry without talking of the setup. And I'll show you an example based on those trades that I took this week. Are you following now?
Yes, sir.
Good. Now, if you look at this, this is US Tech, this is US 100. Okay? If you look at this, All this one, they are just contraction, breaks of structure. This is inducement. This is taking. Okay? Now, look at where market has come to, your demand here. Don't you have inducement that it has to clear? And at what point did it clear the inducement? At what point does it have the inducement cleared?
London, New York overlap.
London, New York overlap. This
That's 330, sir.
is your trade. Yes, this is your trade to the upside. So you have structure prepared, you have structure taken. When is the structure taken? London, New York overlap. That is your trade. But I now want to teach you how to read the market at the point of entry. How do you read the market there? That's what I want to teach you. But I cannot go straight there without telling you that everything. See, let me tell you. You can have your bias time frame. You have your analysis time frame. You have your entry time frame. The most important time frame is your analysis time frame. Hello?
Yes,
Hello?
sir. Yes, sir.
The most important time frame is your analysis time frame. Do you know why?
No, sir.
You know, the reason is simple. You can have a bearish bias, okay? And your analysis time frame will say you are in for a buy. Vitus, can you expatiate? Can you let us know why? Why?
If your analysis time frame is showing you a buy structure and your bias is bearish, well, you have to like go with the current flow of the market on your analysis time frame.
God bless you. That's all. Your bias is bearish because the market is at the top. But excuse me, at the top there, you are having a bullish structure. You are having a bullish structure, and that structure is a complete structure in the sense that you are having your inducement, and inducement is cleared. You get your liquidity, boom, at what? At maybe London, New York overlap or London session. Excuse me, forget about the sell. Packet your sell and throw it to the dustbin. You are in for the buy. This is why many people all over the world, they are selling. I'm looking to buy. Why? We have gotten a buy structure, not a sell structure. It does not mean the market will not sell. Just as I told somebody who sold me on 4 hours or daily that euro dollar is showing divergence, that is going to sell. If it's showing divergence, does it mean you should sell? It's telling you that imminent sell is coming, but it's not ready. Why do I know that it's not ready? Because it's showing me a bullish structure. And a bullish structure is telling me I have more push-up to do before the sell. And even I will continue to buy the push-up until it shows me otherwise. This is market analysis. Not just come to the market and these are the main things that you look for. Now, let's go. I'm going to show you all the trades that I took. Have the structure, the inducement, the mitigation, the structure, the inducement, the mitigation, the structure, the inducement, the mitigation, and the time those mitigations are happening, and how I kept taking the trade. Okay, look at another one. Boom, boom, boom. So, if I have to get a mitigation in New York or London, New York overlap.
Hello, sir.
Yes.
So the structure, the mitigation, and the entry, sir.
I'm coming to the entry.
Okay, sir.
I want to deal with the structure first. So right, if I'm going to get a mitigation at London, New York overlap, then Asia and London should give me the structure. Somebody is not getting me. Somebody is not feeling me. Asia and London should give me the structure. And the component of a structure, you must have a push, a pullback that will give you the inducement. Simple. Look at it. Break of structure. Inducement. Okay? Inducement. If you subscribe to my course, you see what is called inducement there. The theory of inducement is liquidity and is clear. So you will get it there. So you have this inducement, but when am I mitigating? London, New York overlap. And I'm mitigating to field level 75 to 90. Can you see? Then here, I'm mitigating to where? Fib what? 75 to 90. That's all. Remember, it's not compulsory that I must get to 75. Okay? That is where we have to now apply, behavioral analysis of the market, utilizing the concept of time, price, and what? Time, price, and what? Somebody bail me out. Time, price, and what?
Structure. And structure.
Yes, structure here is another good thing, but that's not what I want to hear. That's not what I want to hear. Time, price, and volume. Time, price, and volume. Time, price,
Mitigation.
and volume. Time, price, and volume. Volume. As you will see, when we get to entry, when I will teach you my entry methodology, you will see the importance of volume in everything we are talking about. So look at it. So where's my entry? I'm looking for my entry here. All right. You have another one. You have structure. Boom. What type of price action is this? What type of price action is this? Hey. What type of price action is this?
Big demand, sir.
Discount price action.
Hey. This guy, you are not reading. You are not studying. This is premium price action. You have a push up, this premium price action at demand. You have a push up mitigation. It did not break to the upside. Intention was to sell. And then this is mitigation. Boom. This is premium price action. Premium price action. Demand. Then I have my mitigation here. I'm selling here. Premium price action at demand. I'm selling here. Okay. So now I'm going to sell here. Are you with me? Are you with me? Hey, are you hearing me now?
Yes, sir.
All right. I'm going to sell here. But whether this sell will give me entry, I don't know, because my bias is upside. Okay, but I'm getting structure to sell. Okay, you remember this is news. This is news on Wednesday, FOMC. But I have my structure here to sell. Okay, and then again, watch out. Because of news, a structure is pushed down, and I have my mitigation. So I have a structure to what? To buy here again. See you. And ever since then, excuse me, is there any structure again? After I took this buy, is there any structure again?
No, sir.
No structure again, so no trade. Can you see that you don't just trade blindly? A structure must be prepared for you, and the session you want to trade it must be liquid enough to mitigate it. That is the liquidity we are talking about. Then after the liquidity has taken place, how do you now enter? How do you now enter? Now you have seen the analysis, how it should be done. So you can now see from here that even if you don't know anything, you are the dullest in your family. You can be successful in forex trading. The reason is that you don't know anything about analysis, you don't know about your bias, whether you are buying, you are selling. You can use whatever that is happening in your analysis time frame to what? To understand the bias that you have. The only thing is that you will be careful. Don't hold your trade for long because you are dull and you don't know where market is going. Be taking your profit small. Do you understand? But if you understand bias and you see that the market has a long way to go, just as here, it was easy for me to hold my trade and close it late yesterday. It was almost like 1 to 18 or 20 risk to reward. Crazy. Everywhere, deep blue. Do you understand? So now, let's go to the entry now. Let me now show you how I enter the trade that you will now see. You will now see how it is done. I'll take you to Telegram right now, show you some of the setup, some of the trade. Let's go to this one. Are you seeing Telegram now?
Yes, sir.
Okay, do you see this trade? Do you see it? Somebody should unmute and be answering so that I know that you are hearing. You see this one? I'll show you all the trade. Then I'll take you to. Can you see this one? Can you see? As you are entering, it's not rejecting. It's going straight. Can you see this one? Can you see it? Can you see it? Good. You see this one? Crazy guy. You see that Solomon? You see how he caught it? Boom, to the downside. All right. See another one. Crazy guy. I think this one too now Solomon. Crazy guy. You see him? Boom, to the downside. Okay. You see this one? I gave this one to them. Yes, I gave this trade out to everybody. Good. Where some people are saying they have seen sell. I say, okay, there is no problem. All I know is that overall it's a sell, but when you carry out what is called market sectionalization, it's there in my course. See, even if you are in my mentorship group, if you like, still go on. If you can raise $300, go and pay for that course and get it. There are a lot of things there that is at times when I just remember that I've not taught this thing, I will teach it. That's what I call market sectionalization. When there's a way you section the market, that even if the market is overall bearish, that the portion that is operating at the moment can tell you that the bearishness is there, but it's not ready to drop. Then you can still capitalize on the buy. And then there is the way you gauge where the buy will get to before it will turn. That's how I gauge this one, and I gave a projection of a TP target of 2580. And immediately I said people should close at 2577. Immediately market push to that 2580, which was the sacrosanct TP level that we project in our mentorship community. What did the market do? It came down from there immediately. Crazy, very crazy guy. Can you see? Can you see that here on this? I think you are seeing the picture of this chart. You are seeing it, right? You can see that there was a structure prepared for me down. Can you see? I don't know if I can annotate. Just can you see that you have this? You have this, and you have this. Hey, Abi, I lie?
Yes.
No.
So
good. Can you see that this is when you study characteristics of mitigation, you will see that there is no inducement in this mitigation. Is there inducement in this mitigation?
No, sir.
That is a valid mitigation. And if you have a valid mitigation, okay, clearing the market at London session, the beginning of London, clearing the market, it then means that if you give me entry confirmation, I'm going to take the trade. Boom, for the completion of structure, for that structural requirement to push up before it will come down, I will take it. Do you understand now? So that's exactly what happened here. Okay, now you see this? I think you see it. You see the entry? You see the entry? You are seeing it, right? You see the entry? Are you seeing it?
yes, sir.
Okay.
Yes, sir.
Okay. I'm going to emphasize more on the entry methodology now. Okay. I just want to show you some of the trade. Can you see it? Are you seeing it there?
Yes.
Yes.
Okay. Are you seeing it? See it. Can you see how I will literally kill this particular instrument? You see how we kill it? You see how we kill it? Do you see how we kill this one?
Yes, sir.
Are you seeing it? Are you seeing something? Are you seeing something? You see killer.
It's a killer.
See killer. Can you see it? You see killing. I will show you how to do it. I will show you. Calm down. I will show you. Can you see it? And so on and so forth. This thing is just too much. It's too much, guys. It's too much. Can you see? Somebody chatted me. Say, guy, is there anything you are saying that I'm not seeing? I say, go and learn. You are not even in the mentorship community. You can't catch it like this, because what they teach you is just technical analysis. What we do here is technical analysis plus fundamental analysis plus behavioral analysis. When we combine the three together, we know where market is turning. Can you see it? Can you see it? I can't show you enough. Are you seeing it? I think it's enough. It's enough. Let's go and do our entry. Can you see it? Can you see it? See, you see, crazy. Oh my God. See another one. Crazy. Can you see, guys?
I'm not seeing my own that I kill it too. I dropped here.
Which one? You're not seeing it. No. This is my only me you can see in this channel.
Oh, okay.
Can you see this one? Crazy. Now you have seen everything. Let me now go and teach you how to do it. Can you see? You see it? You see it? You see it? You see it? I can't show you enough. If I compile this thing, if I compile all this entry, compile all of them together, I will win award. You know. But we don't make noise here. We don't make noise. Not even in social media to make noise. If I do social media, I want to teach people how to be successful. Not noise. Can you see? Not noise. It's not about noise. It's about knowledge, guys. It's about knowledge. Can you see? It's about knowledge. Let's help all these people that are just making noise. Don't know how to trade. Let's help them. Let's help them to succeed. Let's help them. It's not about making noise. Look at it. Can you see the entry? Can you see how it flows? Let's go back and learn our entry. Let's go back. Let's it's enough. Abi? It's not enough. It's enough. Hey, tell them. Learn this thing. You will smile. Now let's go to the entry. All right. Now, I've showed you how to get the setup. Okay? I've showed you how to get the setup. The next thing is entry. Okay? And in doing your entry, you must have ensured that market has mitigated weight to your level. Am I correct?
Yes.
Price has hit your level, has mitigated. That is the first thing. Mitigated. Okay? Secondly, you must ensure that timing is right. Timing is what? Is right.
Right.
Abi?
Yes, sir.
Good. And then you must ensure before you say price has mitigated, there must be structure must be prepared. Structure ready. Structure ready for what? For mitigation. If I were you, I would write all these things down. If I were you. But some people, they have big, very good brain. They want to remember everything. It's not easy. Structure must be ready for mitigation. That's the first thing. Even with this one I'm doing for you now, even if you don't get your bias right, you will still be correct because you just follow this. And I gave you what? I gave you a blueprint. Follow it. This is just a follow through to what I gave you. Okay? Structure is ready. That is, if you are expecting your mitigation to happen in London, New York overlap, preceding Asia and London should have created the structure for you. Created the inducement for you, to which you have to mitigate in London, New York overlap. Abi? If you are expecting, if your structure is not the one that have inducement, if it does not have inducement, that is, if it's a fake demand or fake supply structure, like you have this, and this fake demand right here, this leg must happen in London, New York overlap, or it must happen within 1 to 1.5 hours of Europe, London open. That's when this leg should happen. And I have taught you the psychology behind the formation of this structure. That is, market is bullish. It came here around 5 o'clock. No liquidity to push it up to break this top. It has to come to seek liquidity when the volume is big to go this up. That's it. That's it. So if you go and check for USD related pair, if you go and check, you will see that the time that this market is going up from here should be around 5 o'clock. Why is it 5 o'clock? That time London and Europe have closed, and so liquidity in the forex market has dropped. So since the liquidity has dropped, the demand that is available at this level is not enough to push this market to break this top. And as a result, for it to continue to be bearish, it must take that level as fake demand. This is the psychology behind the formation of fake demand concept. That is all. But what I'm telling you now is that the mitigation must happen in London New York overlap or 1 to 1.5 hours on London open for you to consider this as a proper mitigation. Okay, you must see that one, and then the timing of that mitigation must be right. Okay, must be right. Since you have ascertained all this, then you now go to the entry. How do you read it? How do you read it? Now, there's what is called injection. What do I call it?
Injection.
Yes, as you have liquidity, then you have what is called volume injection. Volume injection. What confirmed that what confirmed to me that this candle here, this red one here, okay, let's start from here. You see this long one here with wicks? Do you see it?
Yes.
Yes, sir.
You see that candle mitigated?
Yes, it did. Correct.
Anytime you see a candle like that, mitigated your zone and left immediately with wick.
There's plenty liquidity there.
Don't touch it. You will see another bearish candle come back to fill it. Because every liquidity must be accompanied immediately by what is called injection. So after the formation of this candle, there was liquidity grab, but there was no injection, no entry yet. I'm showing you the secret why it's difficult when I get my entry for market to take me out. It's difficult. It is when other people have been murdered. That's when I surface. When people are literally killed, they are murdered. This market scam me. Stop loss is taking again. That is where when I enter. When you are crying, that's when I enter. So that's what I want to show you. The secret behind that is what I'm showing you. So that you too, you begin to practice that and come up with acceptable entry that market can no longer rig you out. Okay? Now, you see it? This wick has to be filled. That is the candle that grabbed the liquidity. Everything is correct, but that wick must be filled by bearish candle. Let it come. Because for me to ascertain that that candle is the candle that grabbed the liquidity, it must be accompanied by injection. What do I mean by injection? Injection is opposite volume to the one that grabbed liquidity. Say you went to grab liquidity for people to buy. So why are you now not showing me a bullish candle? Immediately you grab liquidity. So if you are not showing me a bullish candle, it then means that there are still some order that are still resting there that need to be picked. I don't understand. Show me your hand. Show me your hand. I don't understand. Show me your hand. This is not magic. It's logic and brain. So now, look at this. Is it bullish? The next candle, is it bullish?
No, sir.
That is no injection. Liquidity is grabbed, but no injection. It then means others still there. Is this one bullish?
No,
sir.
But it has properly filled the wicks.
Yes.
So that is the candle that properly consume, that properly take all the liquidity. And then after it, what do you see?
Opposing candle.
That is the injection. I want to see a fine one. That now for that is what is called volume injection. Immediately you have that volume injection, just indicate under. Market will not come there. Market price will not come back to that place. God forbid. If you come back to that place, the analysis is invalid. Do you understand me? Some people are destined to be rich, while some people are destined to be poor in their life. In the free group, I promise that they will join my session throughout this month. How many of them are here? They are just like maybe 3 or 4. Can you see? They think that the guy that is asking them to come is the guy they knew 3-4 years ago. They don't know that a lot have changed. And then even if you show them proof, they are still Thomas. You know, Thomas will never believe. Even when you show proof, even when Jesus Christ was performing miracle, Thomas was still doubting. Is it Thomas or Philip? Is that Thomas?
Thomas.
Thomas.
Thomas. My name is Philip.
Okay, not you, Philip. Thomas was still doubting.
Not
even
me,
when
sir.
you see proof. You see, people in this industry are so stupid that they think that driving a big Jeep, Range Rover, big Jeep, driving helicopter up and down is equivalent to knowledge. So myopic, so idiotic. When I look at the number of useless traders in this industry, I just shake my head. If you don't show off, carry Jeep. If you are displaying knowledge, they don't even listen. They don't know that some of us who have invested in businesses 3-4 years ago, we had money to buy Range Rover Sport. We did not buy it. We invested in the future. They don't know. So they think that you must show off. If you don't show off, they think that you are not making money in this industry. So it is the person that is carrying private jets up and down, even without knowledge. Now the people that they follow. I just look at them, I just are they there? Now go suffer. Some of us will gain the knowledge, we go they chop money, they go. And are they there? But here they say Nigeria bad. We don't even know. We don't know. Whatever they talk, whatever petrol, we don't know. They buy. If I collect $500, they give me like 750,000. How much I will chop inside before I will collect another one? How much I will chop? See, let's continue. So now let me show you how to do it. After injection, this injection you see, this injection you see is equivalent to after you see red in a traffic light. Is it orange you see or yellow? Get ready is what? Vitus. Yellow. Correct. This injection is your yellow light. Injection is your yellow light. Get ready. And I told you last week, it forms the impulse of your 1 minute time frame. That forms the impulse of your 1 minute time frame. If you bring this one and bring it here, and you go to 1 minute, you see what will happen. This is how I do it. This is how I do it. This is how I do it. Interesting. Can you see? This is the impulse, guys. This is the impulse. Forget about the thing that I say. This is the impulse. Okay? Look at the pullback. Look at the pullback here. So anywhere here, pullback satisfactorily. Put your stop loss below this injection and then project your TP. Let's go back to that. Immediately you enter here. I beg you in the name of God, remove the chart from 1 minute. Go back to where you get you are doing the analysis. Okay? And then, can you see? This is how we do it. You see that the market did not come back. Did it come back?
No, sir.
Correct.
No, sir.
It did not come back. Yes, it did not come back.
Last week you told us about the market need to take the supply level before you enter in our entry.
Yes, you can do that.
Okay.
You can do that. That is an extra measure. But the only problem is that you are going to be missing some trades. Because by the time you take that supply, that pullback will not pull back enough for you to enter.
Yes.
That's the problem. That's the only problem. But your win rate will be very high. And then for you not to miss some of the trade, it's very painful. After monitoring inducement, monitoring everything, you now achieve mitigation. You now come to your entry, you are now missing the trade. You know that it can make you cry. It can make you cry. Because if you miss a trade like that and it goes to hit your TP, it's more or less like you have lost money, even though your account is intact.
Yeah.
So now, if you want that supply, let's see this one, whether it will do it. Let's see this one. If we follow it, see the supply that caused the mitigation. Look at it here, right?
Yes, sir.
Now, if you allow this supply to be taken, it then means that this will be your entry. Time has gone. Your entry will have come in Asia when you are sleeping. Do you understand me now?
Yes, sir.
So you can adopt that. Beautiful. But you will miss some trade because some of the trade will take that supply, but will not even bother to come back for your entry. It will keep going, and you cannot jump in. But if you can restrict yourself to that, excuse me, your win rate will be very high, and you always be correct, but you will be having a fewer trade. So the idea behind this one is for us to gauge when injection enter. As soon as injection enter, you now put a barricade like this. That would define your stop loss for you, because it is expected that after injection, liquidity is confirmed. And after injection, after JP Morgan, Morgan Stanley, Barclays Bank, they have entered. What remains? What remains?
Not just market to go.
Professor has spoken. Continue. We are in a gathering. All the professors, they have spoken. Then undergraduate said he want to talk something. What do you want to talk? Your professor don't speak, don't round up. You say you want to talk something. We go tell you to sit down now. What do you want to talk? We pass professor again. All right? That's how it is done. You can use 15 minutes, you can use 30 minutes. Doesn't matter. It's the same thing. Let's look at the next one. You see this? Market has gone. But for indices, its market is alive by 5:30. You know why it is alive?
No.
This one has nothing to do with London and Europe. This is not currency. This is not currency. Currency, when you see euro dollar, it's combination of United States and euro economy. When you say GBP USD, it's combination of United Kingdom and United States of America. But when you are talking of US Tech, US 100, you are talking of exclusively United States of America alone. It has nothing to do with another person. So even I can get my mitigation by 6 o'clock. Because by 6 o'clock, market is just 3 to 4 hours into the session. So market is still alive. This is how you look at the market. Somebody who is just trading indices now will say, this is 5 o'clock, no mitigation again, we run away. Because of lack of understanding.
So what about BTC, sir?
BTC is a USD something. BTC is paired with USD. It's priced in USD. So you should have your mitigation in the normal this thing. What do we call it? Just like US Tech, just like this US 100. BTC can mitigate by 6 o'clock. In as much as New York session is active, BTC can mitigate anytime. It's not related to Europe or anything. I don't know if you understand what I'm saying. Just like gold will mitigate around 4 o'clock. Go and back test. If I'm wrong, come and tell me. Most of the time, gold will mitigate by 3 o'clock or 4 o'clock. It doesn't mitigate sometimes by 1, 2. No. Market will enter deep into New York session before it will now mitigate. So let's go. Now, look at the candle. Does the mitigation, does it leave wick behind?
Yes, sir.
Correct. This wick it leaves behind and needed to be filled. Look at the candle that filled the wick. This is not injection. Why is it not injection? It's you can't inject after liquidity when there is still some money under. You see, have some money on field. That's not injection. Look at this one. Does it not leave a wick behind?
He left it.
So I'm not interested. No injection yet. Look at where I have my injection. I really have big trouble taking this trade. Look at where I had my injection. Okay? And after this injection, I'm not even sure I was able to catch the entry. I'm not sure. Because when it was ready, I was asleep. Look at the injection. Go back to 1 minute. You will see it. Injection will help you not to be early buyer or early seller. Okay? Look at it. The injection is here. Forget about where I put this thing. You know it's 15 minutes. So look at it. So this is supposed to come back. This is supposed to come back here for me to enter. Is that not? Does not come back until Asia came. So I couldn't get this trade. All right. So next one. Next one. This one, I did not get the sell. I did not get the sell. Look at the liquidity. Do you see the injection? The sell injection? Do you see it? That I filled part of the, every part of the wick and came down. Do you notice that?
Yes.
Correct.
Yes, sir.
Now, look at it. If you go to 1 minute time frame, it didn't give me entry. Though I was not even interested in the sell. I wanted the buy because I already knew the interest rate has been reduced. So the implication of it is that who knows the implication of it to capital markets when the interest rate is reduced? What happened to the capital market? Drop or expand?
Drop, sir.
Why do you say drop?
Because if the forecast is, there is a place you use an illustration that if the forecast is 3% and then the news comes out and the news is giving you a half.
The news is giving you a half.
Result for the news or the effect the market is going to take will be a drawdown. It will not give.
No, you are not getting it. That's not me that said that too. Maybe my Taiwo. I'm kind of my Ejima talk that one. No be me. So you be able Anthony Mba.
Yes, sir.
And my Ejima talk that one. No be me. So
okay.
When you have a reduction in interest rates, okay, you are that will make USD to fall. USD will lose value, okay, because it's no longer an attractive currency to buy and save with it. So it will lose value. So because a currency that you are not looking for will it not fall in value? It will fall in value. So when it falls in value, what happened to the stock of the capital that are the companies that are quoted in the New York Stock Exchange, Nasdaq, and all those things? You know what happened? Those stocks will be affordable because they are now cheaper. If the share is $20 per share, but in your currency, for you to get $20, you will need 15 pounds. But now that dollar has lost value, for you to buy this share of $20, you don't need 15 pounds again. You need maybe 10 pounds or 12 pounds. Is somebody getting the logic now? Is somebody getting the logic now? So because you require less to buy more of US dollar, it is easier now for you to do much investment in the capital market. So if you plan to buy 300 units of share before, you can now afford 400 units. So a reduction in interest rate of a particular country will cause a boom in the equity market of such country. So because we are expecting a boom in the equity market in the United States of America, you expect the derivative. Example of derivative is US 100, US 30, German 40, and all those things. So those ones, they are to measure the performance of those key companies. So those ones will be bullish too. So that's why I said I was not expecting myself to sell this one. So let it sell down, I will now buy. That is the reason. So you don't trade blindly. You need to understand the fundamentals that drive the market and put them in proper perspective. Okay, put them in proper perspective. That is when you become a proper trader. That's why I keep shouting. People think when I'm shouting for them to go and pick my course, they think it's because of the money. They don't know that I put that course together so that many people that don't have money will not worry me for mentorship. I can't do mentorship for less than $2,000 US. It's not possible. It will never happen. I can't teach you 6 months for less than $2,000. Even I don't even want $2,000 again. I'll take it to 5,000 because I don't want this thing. You want to learn more? Go to the website. Everything is there. Do you understand? So now look at where the entry. Though the entry came, this is the impulse. This is the next impulse that you see. This is the injection. After that mitigation, this is the injection. Look at the pullback, fake demand. That is the entry here. I told you where the injection is. That defines your stop loss. That's it.
Fake supply, sir.
Fake supply, rather, not demand. Fake supply. Do you see it? But I was not interested in the sell. Now, look at the buy now that I have to enter in the night. Should I clear everything now? It's clattering together. Let's clear some of those things. Let's clear it. Yes. So now in the night, I was expecting this inducement to be cleared. This inducement cleared. It cleared for me. Do you see that this one now did not clear to leave big wick behind?
Yes, sir.
You see it? When it doesn't leave big wick behind, and you see injection, fine candle form immediately, that is a correct one. It means that the mitigation was not done in gra-gra. No gra-gra in that mitigation, a correct one. So once it happened like that, this forms my injection. I come back. Okay, watch out. This is how I caught it. Okay, after this one, this is the injection, Abi.
Yes, sir.
Boom. Here I told you it's not compulsory that it must come to 75. Get that clear. I enter. Stop loss below injection level. And then I take my trade to the upside. This was the biggest trade I caught in the week because I had it till the next New York. I told you 1 to 18. Yes, there are some times, but don't do that. I will not tell you now. Hi, I was not supposed to say this. Don't do that. Don't do that. I said it. Don't do that. This is your stop loss. So this is your stop loss. Below injection is your stop loss. Below injection is your stop loss. Below injection is your stop loss. I'm telling you, good, because you don't have much account. Your account size is not much, but this is where I put my stop loss. Just below where I enter. That's why I got 1 to 18 risk to reward. If I had put it at the normal place here, I could have just gotten 1 to 8 risk to reward. Okay, I close it here. Here, when this push up happen, I close it. Do you understand me now?
Yes, sir.
Please, I beg you in the name of God, put your stop loss below injection for a buy and above injection for a sell. All right, so let's go to the next one. If we still have one more, I think that is all. That's all. That is all. Do we understand it now?
Yes, sir.
Understand? Let me know. This is how I do it. This is how I do it. All right, this is how I do it. Okay, sometimes injection can be so fast and sharp. Okay, very fast and sharp. Those are the type that we take for a buy. We take your supply, opposing supply that caused that injection. It will take you, if you take it out. Hello?
Yeah, okay, sir.
Are you getting what I'm saying now? If you are having this,
Yes, sir.
you know, this is the mitigation. This is supply that caused the mitigation. Injection can be so fast that it will take it out in one sweep. So those ones is easy. When you come back, you buy. But in many cases, you will recognize that liquidity has been grabbed, but injection will not go and take that opposing supply, and you see structure. You will see a pullback or a corrective structure. Before that supply is taken, you can take your trade. Because sometimes, once this market takes this supply, I discover that sometimes it doesn't give us a pullback for us to enter. And of course, we know by the virtue of the training that we have received, you cannot just jump in anyhow. You can't jump in anyhow. It will be suicidal. And we don't want that for now. Is that okay now?
Yes,
Yes,
sir.
sir.
So that's how I do it. That's how I do it. Any question? Any
Yes, sir.
question?
Sir. Yes, sir. Sir, you said that on this trade, that when you saw that push up, you close your trade.
Which one?
What? This particular one, this one on the screen here.
Yes.
You said you made a statement like, when I saw this push up, I closed my trade. I want to know what
the reason why I say
what
the
you
push
have
up.
in the content of that push up.
Yes.
Yes.
Yes. The reason is this. Now listen to me. As you are here, you are also learning behavioral analysis. In every session has its own liquidity. Every session has its own liquidity. And if a market is bullish, where will liquidity push to?
If the market up, it will push up.
Another person.
Down,
If a market is bullish, where will liquidity seek to go and grab?
Down.
Okay,
Below.
down.
Down.
That's mitigation.
Correct.
That's mitigation.
That's mitigation. And every session has its own liquidity. London has its own liquidity to take. London New York overlap, which is New York, has its own liquidity to take. So if I have head trade from here to this level, I'm expecting that liquidity will come. Even though this market does not have a structure to which it must take liquidity, it is possible for it to even want to attempt to make bigger correction. So when you hold trade like that and you now enter, you can see that this is 230. So when this one push up at 330, anything after 330, anything can happen. It can make boom before it will go up again. That's why I close my trade. I don't want to be part of that boom. Okay? I don't want to see $1,000 return to $200. That's why I close the trade. That's why I say after I see the push up, because that push up might be a push up to take liquidity to what? To come down. Even though that come down might not be a mitigation liquidity, it might be the push up that take liquidity might be a liquidity to achieve a pullback. So you know that I've taught you that one now. That one is what is called secondary what? Secondary liquidity. Hello?
Hi.
Do you
That's
see that
internal
here?
structure. Internal structure liquidity.
Not the internal structure. When you have liquidity here is never internal structure now. Excuse me.
Okay.
Here, if you see liquidity here, is it internal structure? When you are having all this,
No, that's
is it internal
external.
structure? And it's not internal. We call it primary liquidity. Primary liquidity. Then the secondary liquidity is the one that mitigates into the structural level. Structural level. That is the primary one. That is the cocoa. Then the other one is secondary. Okay? Within the internal structure, you can have a primary liquidity there, you can have a secondary liquidity there. Within the internal structure, the bottom line is that what defines a secondary liquidity from a primary liquidity is whether that liquidity is taken at the structural level. If it is at structural level for you to buy or sell, then it is primary. It is intentional. If it's happening for you to achieve mitigation for you, it's secondary. It's a refu one. It's like B2. Can't compare B2 to Lexus Jeep. The difference is clear. Is that okay now?
Yes, I wish I had this knowledge earlier.
That is why I told people who cares to listen that mentorship does not end. So if you pay for mentorship with me, and after you have taken the courses, you now think that you have completed your mentorship, you are faking yourself. You are deceiving yourself because you just finished theoretical work, just like if you go to do PhD. If you finish coursework and you think you have finished, you are deceiving yourself. After the coursework, you have to go and start your research. That's how it is. So if you finish my course from A to Z, you have just finished part 1. Then this one, that's where we'll be showing you on a practical note how the markets will be. And as you are attending the sessions day by day, you are getting improvement. You are getting improvement until you now come to the category of TP Smarts. TP Smarts. TP Smarts. TP Smarts. TP Smarts.
Lack of that knowledge I saw my profit drop from around 1,200 to 800 before I close it.
Can you imagine? Can you imagine? Can you imagine?
And this is what caused it. This push up too.
So you don't. So you must take cognizance of session liquidity. You must take cognizance of it. It's very, very important. Okay. All right. So any question, guys? Another question?
Yes, sir. I have a question.
All right.
Well, there are some. I believe there will be some cases or some periods where the injection will be so fast that it might not give us a pullback to enter. So
yes.
In such, we just like, okay, just leave it like.
I see. No, I see. I have an example like that. Let me go there. And what you will need to do in that scenario, I will also tell you. Hey God, is it good? Where did I see that? The injection was so powerful that I think you are seeing injection here. You see it here?
Yes, sir.
This confirms that this liquidity, this is liquidity. This is my injection. Boom. Can you see? I'm also showing you this is a Gamma 30 DAX. You see this? You see this? You see my liquidity cleared. I took this trade live. Liquidity cleared. Left behind unmitigated weak. This one came, it didn't feel it. This one came, feel it halfway. Itself, it left weak. This one came, this one. This is my injection. This is my injection. Boom. Then when you go, that's the import. This is the pullback on 1 minute time frame. This was my entry. Boom. It was crazy, guys. So I'm not putting stop loss here. I'm putting it here. But this is my injection. Injection defines the stop loss. Can you see? Let me show you where. That's the example. It's DAX. Look at it here. Look at it here. You know that this trade, we have had our inducement created down. New York, London, New York mitigated it. Okay. This was our injection for this trade. And then what happened the next day? You have fake demand, right? Against
Yes, sir.
against London. Against London. You mitigated. I was now expecting injection. Excuse me. Do you see injection? It blasted everywhere. So what you will do after injection blast everywhere, in as much as you know that the level where you are is not a supply zone, where that injection, don't go and make mistake of that injection to be an injection for buy, whereas it's a mitigation for sell. And how will you know whether it is a mitigation for sell? If it is a mitigation for sell, then the sell is going to be very fast and drastic. But if the coming back here is very slow, then you know that this is a true injection that is pulling back. When it pull back to your area, make sure that it is structurally efficient. What do you mean by structural efficiency? Okay, look at the sell here, look at the buy here, look at it. Price has locked onto themselves. Boom. Can you see? Structural efficiency. Boom, 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 boom. This market is structurally efficient. Boom, 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 boom. This market is structurally inefficient. Why? Look at it. Look at your support. Look at your resistance. Look at it. There is gap. Look at your resistance. Look at your support. Look at it. There is gap. Structural inefficiency. Here, structural efficiency. And then when you come here, you see it. You see it. Price is structurally balanced. Price is structurally efficient. For that reason, you are qualified to take your trade from here, my friend. Boom. Stop loss below injection. TP up. This is how we do it. Another question? Do you get it now, Vitus? This is a perfect example of what you are talking about, right?
Yes, yes, sir.
Correct.
So the I have another question. The injection is just one candlestick, right? Like
yes,
just one.
Correct one, not sick one. No. If he's sick, it's not correct injection. No. Because if the order has been tapped and is going, it's supposed to show us evidence that yes, you don't catch real order. When you don't sick, leave him, another one will come. Then the one will well. So if he's sick, just they think you be pharmacist. You just they think which drug will give this one, which drug will give him. This one sick, which drug will take, what they do him. But when you see the one well normal, you go no now this one well. You don't need the drug. This one well. You now have your yellow light. Now prepare for your entry. Okay?
Yes, sir.
Another question. See, I show you for NAS 100 that time. See my injection for US German 40. So I'm showing you my trade. See my injection there. I took this one up. 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 But unfortunately, guys don't trade it. In the free group where I promised to be giving them trade, they don't have an account that can trade all these indices. So I don't bother to just give them. See my injection here. We literally catch everything except this fall. Except this fall. Why? It has not given a clear structure to show that it's about to sell. And then you don't even want to sell indices now. So what we are expecting is, anyhow, if you can get here, we start buying to the upside. It's as simple as that. Is that okay now? So that would be that you have this structure here, and you clear all this inducement to the downside. After that, upside again. Simple. Any other question? We have spent 1 hour 11 minutes. Any other question? Is there any new person?
You can use any.
Huh?
Oh, okay.
You what?
We can use any time frame. You said we can use either 30 or 15 minutes.
Yes, use either 30 or 15 minutes. But most of the time, I use 30 minutes so that I can be sure when. So that I can be sure of when that injection has really happened. Okay, and if you are using 30 minutes to get that injection, make sure that your analysis time frame is 30 minutes. If you are using 15 minutes to catch your injection, make sure that your analysis time frame is 15 minutes. You can use any of the two, but I was using 15 minutes before. But you know that some candles in 15 minutes will look somehow. You think it's really injection. Then another one will come again. So I changed to 30 minutes, to look for it. It doesn't take me anything. It's almost like the same thing. But sometimes 15 minutes will want to confuse you. But 30 minutes will do a proper job for you. A human job, honestly. All right?
Yeah, so the pullback.
Okay, I'm hearing you.
After the volume injection,
yeah,
the pullback
yes
entry now. Was it composed with just one candle that makes the pullback, or like
no, it cannot even be one candle. It will come down now. If you want to come down, it will come down. If it doesn't want to come down, it will form a corrective structure, something like this.
So, okay.
It will form fake demand, or if it's for sale, to form fake supply, you sell. Fake demand, you buy. Okay.
Now I'm talking about the analysis time frame, because we have to actually see the injection on our analysis time frame before going to our entry time frame.
Yes, you say is it compulsory for it to be what?
Like the number of candles, like for the pullback, the number of candles on the analysis time frame must it be just one, or it can
for
be
the pullback on the higher time frame? We are looking at, you mean the mitigation candle?
I'm talking about the volume injection candle.
One is enough for you to confirm that this is injection now, if you are properly mitigated. You want to see two before you are sure?
No, I'm just saying sometimes it might not pull back immediately. Like I'm talking about, what if it takes a lot of time before it pulls back to your entry level?
That is if you are looking for pulling back to the entry level, you are not talking of 15 minutes time, 15 or 30 minutes time frame again now. You are talking of 1 minute. 1 minute.
Okay.
1 minute does not take time to pull back. If it doesn't want to come back to your entry level, it will form a corrective structure. I keep telling you this. It will form if it doesn't want to come back to this level for you to buy, it can form a corrective structure like this and then come down. Then you buy. Is that okay now? Then
yes,
it can go like this, go like this, go like this, go like this, then come like this, then you buy. It can go like this, go like this, go like this, go like this, then you buy. It can come in any way, then you buy. But what happened is that in as much as that your injection is confirmed that liquidity has been taken, put your stop loss below. Even sometimes, let me tell you, sometimes I do something like this, something crazy that I should have even done on EU, but because I was on gold, I didn't bother. Now, if I see this, I gave this setup. Who is aware? I gave you this setup. Who is not aware here? I gave you this setup that market will go and come down to mitigate this place against FOMC, and then you buy from there.
Yes.
Correct.
Yes, you
now,
did.
Correct. Now it has properly mitigated that level. So immediately I see this big one, and this one came, I know that this is injection. Ordinarily, I could just do something like this, put stop loss below the injection, and then I go. Ordinarily, but I was already on gold. So I didn't want to, put too much pressure on my account. I left it.
Yes. I remember then, to me, I was on UJ.
Yes.
That's credit too.
Exactly.
I missed this one.
And it did well.
Yeah.
Look at it. It did well. 1 to 6.
Yeah.
Can you see?
Yeah.
And in the night, when this happened, I was studying. I wanted to send it to the free group, but I said no, because they will say this guy doesn't sleep. What happened? They will think I was trading. They will not think that I was reading. You see the logic? And I left it. I just left it. Let me leave them. And then by the next day, we have seen it upside here. But that time, I was already on gold. Can you see? Gold. It was gold that gave me perfect analysis. Can you see my injection? Can you see my injection?
Yes.
After mitigation, can you see my injection?
Yes.
Yes.
Okay, now watch out for the entry. Watch out. After injection, I told you that injection will serve as impulse for my 1 minute. Very crazy guy. Crazy impulse. Can you see inducement, boom. That was my entry. I entered first one here. It came down again. You know, concern me because this is my stop loss. This is how this trade. Literally, I even came here and entered another position because I was awake that night. I saw this. You are going to London. You never even reach Ethiopia. I put another position. Idiot. Boom. Can you see? Can you see? This is how we literally kill the market. Can you see? Simple. Can you see? So much money. Any question? Is it difficult?
No, it's not, sir. It's not at all.
You see, people from the free group, they don't go. How many? Is there anybody from the free group that I see here?
I'm here, sir.
Anthony Uba, you are the only person that remain, Abi.
Yes, boss.
Can you see? So you see that even this one, they cannot even enroll for our mentorship because we have just done a little above 1 hour on a call. They have run away. They cannot cope with the stress. How would they know markets? How? Tell me how. It's going to be difficult now. They think as we are smashing TP, they think we don't put in the work. We put in the work now.
So they still have other people there. Babarinde too is there.
Babarinde there. Babarinde no there. They don't run.
He's there, sir.
He's there. Babarinde is here.
Babarinde is there. Okay. Only two of them.
V2.
V2 now.
Oh,
V2.
Now go change the name to.
Can you imagine?
He won't make me think saying the woman. You know, a woman they like that kind of say V. Somebody will be Victoria. I will say now V.
Okay, sir. The last time you said you're going to take us on corrective structure.
It's very simple now.
I hope you haven't forgotten, sir.
Waiting a corrective structure not be anything now. Even some of you are already using corrective structure. Corrective structure is more or less like fake demand or fake supply. You know, there are a lot of corrective structure, but the one that is useful to you is more or less like fake demand, fake supply. If you have something like this, and this market goes like this, it will break the top. You know, once you break the top like this, two possibilities exist. You can either come, take this one before you buy. That one is inducement. Abi?
Yes.
Correct. Yes. Or you can come like this and go. That one is what?
Convergence.
God bless you. Yes. Convergence. That's all. It means that this push here is stronger than the first push. So it will go. That's another way. Then you now see another one will be like this, up, come down small, go up, cannot break the top. This one will now come, take this bottom. Once you take that bottom, get ready. It's not compulsory to get here. Why? Flat corrective structures are not sharp. They are not sharp. They will not come to your FIB 75. They will never. All that is required.
This is the one that usually called flat corrective structure.
Yeah, this is a flat corrective structure.
All that is
they are flat.
Yeah, that's what I'm saying. That they are fake demand. It's fake demand.
They are flat in nature. They are flat in nature.
So they don't need to come down. So when you see fake demand does not need to come down to your 75. When you go and study fake demand very well, they don't come to your 75 to 90. Why? Because they are flat in nature. Only thing that is required there is that the last leg must take the level here, must take it.
Suppose inducement.
Yeah, must take it. Once you take it and the timing is right, you have your trade. Okay? You have your trade.
Yeah.
Correct. So that's how it is. Any other question?
Thank you, sir.
All right. I'm going to draw the curtain for the day. Make sure the blueprint I gave you guys, are you implementing it at all?
Perfectly.
Yes, and it's making a lot of difference, right?
A whole lot, sir.
Correct. I expect that everybody should be able to do
Yes, sir. Yes, sir.
3
Yes,
to
sir.
5 trades, 3 to 5 trades to smash TP every week, smash TP. But the only problem I have with you guys is that as we are smashing the TP, you are not showing people in the free group to encourage them. Please show them, encourage them to learn. Do you understand? Encourage them to learn. You are just keeping the TP you are smashing in the mentorship group. Show them.
Right,
you know, we don't make noise. Don't make noise. We are not in social media to make noise. Don't make noise. In as much as where you are in your confined area, you are making progress and you are putting food on your table. Continue. That's what you need. You don't make noise too much. All right?
All right. From next week. So, from next week.
But yes, we'll see again. We'll see again next week by God's grace. Bye bye, everybody.